we have panic in the markets. You look at the sentiment, we have the highest bearish reads since 2009 and 2022. It's crazy. You would think the world is going under. Stock markets crashing, high-tech stocks crashing, gold down, cryptos. Oh my God, bloodbath in the crypto sector. But hold on, everybody. Let's take a look at the S&P 500 index, what's really happening, where we stand. I'm going to tell you the 3 signals you need to pay attention to right now for the coming weeks. And those will give you the direction of the markets for the coming month. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay. So before we start talking about the S&P and also some swing trades that are working right now where you can make money in this market, let's start with sentiment because this is really important. Look at this graphic. This is the bullish bearish sentiment. Bullish obviously being blue, bearish being red. And you can see we have reached, as of today, a level over 60. That's almost twice as high as the historical average. And on the other hand, you see the bullish sentiment is below 20. The last time I saw this was in 2022 when everybody thought that we would go into like a crazy deep recession. This is extremely high on the bearish side. And this is a great contraindicator that the short-term bottom is not that far away anymore. And if we look at the chart, and this is the S&P 500 that you see here on the daily, then you see we have reached the lower end of the uptrend. So this uptrend has been in place, and I'll explain the horizontal lines in a second, since 2023. This is a significant uptrend. All right. We will probably undershoot it and break this blue support zone, the upper one that you see. That won't surprise me at all because that happens quite a bit. You trigger the stops, you get the retail investors out, you shake them out. You get a bunch of them to open up short positions, which is crazy because of the volatility right now. You do not want to do that. The volatility is way too high for that. But regardless, this is what the professionals do. But here's a fact. Fact 1 that you need to pay attention to. Look at the RSI on the bottom. We are reaching way oversold territories. If we hit this zone here, this marked zone around 30, right? That is a great indicator that the bottom is very close. Why is that? Well, here comes the horizontal lines. Look at this. I marked since 2022 the times when the RSI for the S&P 500 on the daily reached 30 or below. And look what happened each time. Massive rally followed, massive rally followed, massive rally followed, small rally followed, then another decline. This could happen. We're going to talk about this in a second, okay? This could happen as well, but we went up short term after it. Short term up, one more test. Again, like I said, could happen. Massive rally, big rally, small up move, down move again. This is the one time where it didn't really work. And why is that? Well, it's 2022, January. You know what happened 1 month later. The war in Ukraine started. Everything changed. So we can kind of cut out this last red bar, this one right here. We can kind of take that one away. And in all other ones, we are 5 for 5. We are 100% of the S&P going up. Maybe only short term, but in a lot of times on bigger rally moves when the RSI hits 30. So that's our first indicator we want to pay attention to. The second indicator I just talked about, and that is we are reaching the lower end of this uptrend channel. And we are also seeing this with a lot of stocks and a lot of big tech stocks that are important for the market. They are not far off anymore from major support zones. So we want to see how do they react at these support zones. If they start forming hammers, then we want to get in on the long side. However, and this is the big one for the S&P specifically, we want to pay very, very close attention what happens after the rebound. Okay? So this is step two. First thing, we want to pay attention to the RSI. Second thing, how will they react at the big core, big stocks that we need to work, the big sectors that we need to work, and the indices like the S&P here. How will it react at this support zone, this double support zone? Does this hold? If it holds, then that's okay to start swing trades on the long side. However, and this is the third part, really important, we want to pay very, very close attention how the market reacts in the up move. The down move now is not that interesting right now. What's interesting is the up move. Are we going to see a fade of the up move? Meaning, are people starting to sell the rally? If that happens, that is a big time indicator that the market is in serious trouble. And that's when you want to start. I mean, I really hope you do not have any leveraged positions in the markets right now. If you should have learned anything from the past 2 weeks, it is that you do not want to have leverage in 2025. You never want to have leverage in the markets, but in this year it's gonna destroy investors, and we're seeing this in the crypto sector. But if the market starts to fade the rally, that means that we have a shift from buy the dip to sell the rip. And if that happens, that is an indicator that a bigger move down is coming. And on the chart side, the main zone is this lower support zone. If we go below this in the S&P 500, we have a problem, because then we marked a lower low right here. And we haven't done this, as you can see, in a long, long time. We came close here, but we didn't make a lower low, right? Higher low here, higher low here, higher low here, higher lows. You see, this is significant. So remember the zone, pay close attention to it. If we close below this and confirm, then the market is in trouble. So why don't I think that a big time crash is coming? And that is, I look at the financials. This is the iShares US Financial ETF, the IYF. And look at this. This one is holding up like a champion. The markets are basically back, especially the tech markets, back down to the lows when we started the Trump rally. But the iShares US Financial ETF is up. And that's usually not the case when you have a big crisis brewing, because obviously Wall Street knows what's going on most of the time. Not 100%, but most of the time. And when there's a crisis in the market that is happening because of the financials, which is, let's be honest, the majority of the crisis, sometimes you have something like COVID, right? But then you see how fast that is solved. You have something like the war in Ukraine starting. You see how how quickly that got resolved by the markets. In order to have like a big bear market, usually that's triggered by something in the financial sector happening. Too much debt somewhere, right? Typical financial, watch The Big Short, right? Typical too risky banking activities. But we don't see it in the IYF ETF. We do not see it. And that tells me, hey, this is a painful correction, but at this moment, it is nothing more than a correction in the overall bull market. However, we might have change in leadership and in sectors. And let's take a look at the pharmaceutical sector, a sector that has been left for dead, but that obviously is perfect for this uncertain times in the market. This is Sanofi. This is the euro nominated Sanofi shares. This is one of the best. Look at this. This looks excellent. Ascending triangle formation. We love those. We break above this zone. This stock is off to the races. You can get it at this uptrend. That's definitely worth the swing trade in my book. You put the stops right under a confirmed breakdown of the uptrend, and you have the potential to the upside. Or Bristol Myers Squibb. Look at this chart. Long term. Let me show you this. Long-term uptrend, broken, check. Uptrend, check. What is this? Bull flag, right? So, you want to get long Bristol Myers if it breaks above 61.50. Because then this bull flag is solved to the upside. And as you can see, the stock still has a lot of room to grow. And now check out this uptrend that we just retook, right? We broke below it, we tested it, then came the big sell-off. Now we're back in this trend. Well, how meaningful and important is this trend? I'm switching to the weekly here. This is the trend from 2008, ladies and gentlemen. The ultra long-term uptrend. Bristol Myers took this back. This is a big bullish sign, right? Nobody is invested in Bristol Myers. Who buys that? Well, we do as a swing trade because this setup looks quite interesting. If we get a weakness on this and like a retest of the uptrend, as you can see here, which is around 56, 60, 65, I'm interested in going long Bristol Myers because these are the type of trades that will be working in the markets in 2025. Defensive sectors left for dead, fundamentally cheap, stable businesses. I like that. And by the way, the same will go for some of the gold mining stocks, about which I haven't forgotten that. We'll talk next time. But first, have a great weekend. Talk to you later. Bye-bye.